Welcome to another episode of TRVC, the Turkish VC Podcast. My guest today is Sina Afra, founder of Markafoni, Bank Privé company in Turkey, founder of Founder One, impact-focused VC fund, and founder of Girişim Vakfı, the Entrepreneurship Foundation in Turkey. So I'm very excited to have Sina on the program today. Welcome, Sina.
Thank you very much for having me. And I believe you are the first one saying the name of the French company, Bank Privé, in a correct way. Usually that's really a challenge for many people, but Markafoni was inspired by them.
I grew up in France, so I have an edge there.
Yeah, obviously.
I'd like to start out with just, can you tell us a bit about how you came to doing a venture fund?
Sure. But let me start a step earlier. So I used to work in the corporate world. I used to work for eBay and some other companies, and I was a very happy corporate citizen. So one day, one decision changed my life. I became entrepreneur, first company, Markafoni. And then I liked what I have seen there. So I continued being an entrepreneur. Then I called myself a serial entrepreneur. I founded Markafoni, was my first company. But since then, I did 20 companies and I had 12 exits. And in the meantime, I started to invest into other founders. Right.
Now, you mentioned your corporate background briefly, but you were actually in corporate finance, is that right?
Yeah, I started with KPMG and I worked in corporate finance in 3 different countries. I'm a deal maker. In the bottom of my heart, I'm a deal maker.
So, that's interesting because a lot of founders are sort of technical background. Do you find that very a useful background, the corporate finance background?
Well, when it comes to, all the exit parts and financing and understanding and able to read a balance sheet and a P&L, this is extremely valuable. And I also, I also learned many things about the technology. So I think I'm pretty good if somebody wants to talk about system architecture. So I learned during, all the ventures. But in the bottom of my heart, I'm a corporate finance guy.
So sorry I interrupted. So then you started doing some angel investing.
Exactly. So especially after my first exit, I started to do some angel investments. And I didn't call it angel investments back then. I was investing in other founders because I believed that, we need to support other founders at the beginning of their journey, right? So I started angel investing, and I believe I did 55 angel investments, which is not a good number. This is not a suggestion. This is way too many. I don't have any structure, so I don't have an office full of people taking care of the angel investments. It's like I have access to founders, and if I like an idea, I invest.
So why do you say it's too many though? Because many investments means a higher diversification. So in some sense, it's right.
Financially, capital asset pricing model, many investments, diversification, great. But from the point of view of a investor, I'm not able to catch up with all the investments. I'm always dependent that founders get back to me and ask me some questions so I can help them. And if they are silent, I'm not the one chasing for reporting, for numbers, etc. And sometimes I feel this is way too much, right? I should have done a different structure before investing 55, individual investments. And then the next stage was actually the venture fund. So 3 years ago, we founded the first impact venture capital fund in Turkey named Founder One. And with that, I learned also the VC world. So I'm not in the daily business. I'm in the investment committee, but I'm a founding partner of that fund. So I'm pretty much involved. We are in the same office, things like that. And we are pretty much involved. We had a good run. So we did 45 impact investments, mainly Turkey, but all around the world. So we did also some in the US and Israel and Germany and UK and Spain, I guess. And now we decided to go for the second generation of that fund to raise 100 million. The first one is pretty small. So we started with 20 million, but only Turkish investors, which is another challenge, by the way.
Wow.
But now we are aiming to raise 100 million, and the fund will be based in Luxembourg. But we will also continue investing, so mainly Europe, but we will also invest in Turkey and some other developing countries.
So you're targeting a broader LP base?
Yes.
Outside of Turkey as well?
Yes, I think we are targeting mainly DFIs. So the EBRD, IFC, KfW from Germany, Swedish Development Bank, they have the big buckets for impact. And we are now a fund with some track record. We already had our first exit, or even 2 exits, but one was significant. So the numbers look pretty nice with that one. And I believe we can show what we are doing differently.
Is the first fund fully deployed at this
No,
time?
it's 70% is deployed. So we
Right.
need.
And are you saving money for follow-ons, or
Yes. No, we are saving mainly money for the follow-ons. Now with 45 investments, maybe we'll do 5, 6 more investments new, but mainly we need to hold back some money for the follow-ups.
So with 45 investments, it's pretty small tickets, I imagine.
Exactly.
So fairly early stage.
It is definitely early stage. So we believe in a little bit into a spray pray type of a strategy. It's very difficult. There are technology companies with impact. So we are first measuring the impact and then we do the business evaluation before we invest. And I believe we have a very sophisticated tool to screen. We have screened 2,300 companies.
So I was curious about that. How do you define impact?
We use the same definition of impact like the World Bank is using.
Okay.
So we have an impact team. They use the exact same criteria like the World Bank. And if impact is measurable, if impact is some of the areas we are focusing on, like whatever, access to education, climate, gender equality, etc., and all the other criteria, they pass it on to the business team and they start to look into the business plans and talk to the founders. And what we also do is we try to be fast, which means in the moment you apply, and you can only apply, you can't send any emails to us, right? You have to fill up a web form, and then we have already 80% of the information we need to start the process. And usually in 4 weeks, we get back to you and say, we have an investment committee decision. It's a yes or no. And after the investment committee, the DD is starting. And usually after 2 to 4 weeks, we are able to sign and close. So this is, I think, important. What I learned as a founder is that many VCs are so slow and it takes such hell of time. It's uncoordinated. You send emails, then 3 weeks later, they're asking for the same email. Somebody else is calling you and asking for the same questions. It's KYC again, stuff like this. With us, it's like, you fill some forms, you attach some data, and then we know exactly. And everybody in the team can log into the system and look up who talked to whom, when, which data do we have, what was the progress, etc.
So did you put in place a very thought out decision-making process? I mean, there's a committee that meets and then makes a decision every week or something? How do you approach
It's every 4 weeks. Yes, we have an investment committee. We have a team. Team is preparing. So there are actually 2 teams, the impact team, just looking at the impact. If this is green light, passes over to the business team. They prepare the IC, and the IC is deciding the yes or no. And usually we have every 4 weeks, we have an IC. And it's very efficient. So we use a same format. So it's always the same structure the people see. Then the GP and the team leader is telling a short story background about the founders, about the business, about the competition market, etc. And then we decide.
There's a clear decision that comes out of the process.
Exactly. And then immediately, same day, the founder is contacted. We share the decision. And if it's positive, then we enter the DD. And this also, then we run into the process. And usually, if it's not too complicated, so then we should finish due diligences by 2 weeks, if not latest 4 weeks. And then we sign and close.
What brought you to doing an impact-focused fund? What was their sort of underlying motivation?
Well, that's a very good question. So there are 2 reasons for that. First of all, if you live in Turkey, you don't see the things happening in the TV, right? So earthquakes, fires, and other things you witness in your more or less daily life, right? And we felt, and this is, there are many people in the founders, so also Faruk Eczacıbaşı, we felt that we need to support technologies and founders who find solutions against the threats created by mankind. So many of the things happening around us, it's about, the climate change, pollution, and other areas is, created by the human race. And I think we are responsible to do something against it. And my abilities are limited, so I will not be able to, have a chemical procedure which is changing bread into plastic bags, right? So then the best thing I can do is supporting people who are able to do this. And the second reason is, climate is a big thing globally. Impact is big in Europe. In Turkey, somebody needed to start and take the first step. And this was Founder One. We are really hoping that we can be somehow a role model for other funds considering more and more impact in their investments.
Are there any other impact funds
in Turkey?
Yet?
No, not impact. So impact is a little bit like the buzzwords AI or climate. So everybody is using them. But if you look behind the scenes, you understand it's a little bit greenwashing, right? For me, impact is really you have to go with the global rules. And this is, whatever. There are some definitions. The most important is from the World Bank. And I don't see anything like that not only in Turkey, not even in Eastern Europe. So the ones who are applying this are usually French impact funds, Swedish impact funds, Dutch impact funds. But, east of Hungary, I'm not sure. We need to change that.
Sure. When you talk about impact, common question that comes up is kind of the balance between impact and returns. You shared that you already have one exit. Is there anything else you can share about the performance of the fund at this point?
Well,
it's still fairly early.
It's super early. It's very difficult, right? But I would say if you take a proxy, let's take a proxy like the invested capital compared to some of the companies did already follow-up rounds. So if I consider the latest available valuations and compared to my invested capital in 2 years with it 2.3 times, which is not too bad, right? I hope this goes like that, then it's great. But as a proxy, we are happy with the first signs.
That's certainly competitive with.
Yeah, no, exactly. And there is, we do not philanthropic investments. At the end, they all have a business case. But the difference is they all have a purpose they are serving. It's not like, Markafoni was just an e-commerce company. We just wanted to sell discounted goods, to many people, and there was no purpose. And all the purposes which we added later on was PR, right? So every sales is, you are doing something good because every sales is.
Do you really think that's just PR though? There's a sense too that basically any entrepreneurship has impact, because in order to do business, it has to be solving some problem that somebody has. It's a very too broad a definition of impact, but do you believe in that at all as well?
Well, I'm not sure. Because I give you an example. So we invested into a company which develops a technology which can predict an earthquake 8 hours earlier, which would be, life-changing. And they have an impact, right? They save lives, they do something good, etc. Then I compare it to an e-commerce company. I'm not sure if the impact is the same impact. You can always say, look, you are creating, jobs, you are, paying taxes. This is also impact, but this is not what I'm, aiming at.
Sure. There's definitely a scale. So you're on to raising Fund 2. Are there any lessons learned from raising Fund 1 that you're applying to raising Fund 2? You're going to a different LP base, but...
Very different one. So in the first one is, only Turkish investors. We have institutional investors and we have individual investors. Individual investors, mainly people we know and who trust into us that we are doing something good. Institutional investors, people we are not connected with, but people understanding that this is a new asset class, impact investing, and they wanted to distribute some money into that. So it was a pretty easy run in Turkey, And in Turkey, everybody knows everybody. So you meet people, you get the introductions, you have some dinners, and you have commitments.
You're well known for being the founder of Markafoni.
So it's a completely different game in Europe. So in the moment you are a Luxembourg fund, then you, of course, comply with all the regulations in Luxembourg. And then you start talking to banks, right? So to very big banks, and they have more rules than I've ever seen, right? So it's not like I do 2 presentations and a dinner and then I will get a commitment. It's like, okay, after that, you need to fill out the 55 pages for KYC, the 35 pages for whatever, and then we need to have 2 workshops and stuff like this. It's difficult. It's much more difficult, and I think my learnings. The first one, I would say, was more family and friends, and it was quick. 2 months, everything was done. This one is institutional. It will take much longer. We are happy if we close it in 9 months. That's one learning.
But a much bigger size.
Of course.
The benefit there. And then also once you have institutional investors into your fund, you have the chance of them continuing with Fund 3, Fund 4.
Hopefully.
More so perhaps than with
Depends on the performance, yes, exactly. But this is exactly what we hope.
So how do you see the Turkish venture kind of ecosystem now? What's your view on it? It's developed a lot since Markafoni. You had some interest from VCs, but probably not Turkish VCs. I don't think there were any Turkish VCs around back then.
Well, at the very end, everybody was talking to us. So not only the few Turkish VCs, but also the PEs, like, the bigger ones. But we already started to dance with, Nespas, and this was more or less too late. But back that time, the VC scene, I think it started more or less with Ali Karabey and Numan with 212.
Yep.
But the main thing didn't change. So for 80 million people country, with the GDP of, north of whatever, 1.3 billion or trillion we have, I believe if I look into the numbers, we have too few VCs. It's still the entire financing in Turkey is too small. If I compare it with, yes, richer countries with 80 million people, France, Germany, then I see a much bigger variety. If I compare it with, developing countries, comparable to Turkey, maybe they are bigger like Brazil, I see much more going on. Turkey is still very limited, and there are some reasons for that, right? So the number one reason is that I believe that the Turkish domestic market is not strong for exits. All the big exits, so if you say all the exits in the last 15 years above 100 million, there is, I think, only one Turkish acquirer, right? We are dependent from other countries, other companies, etc. So we don't have a domestic market for exits. Also not for IPOs for tech companies. Very limited. Second reason is...
There's been quite a few IPOs in Turkey the past few years has been going strong, but interestingly, not tech companies.
Exactly, because tech companies do not used to be profitable in their last 2 years, so they are not allowed to qualify for an IPO, right? Then there is, I believe, also a structural problem. That that in Turkey we use a structure called Girişim Sermayesi Yatırım Fonu, which is maybe comparable to a SCS in Luxembourg, right? But only a little bit comparable.
So it's the local regulatory framework for a VC fund, which is actually, it's not an entity of its own, it's a financial construct.
Exactly.
That's managed by a fund manager.
Exactly. So if I look into the numbers, we have 412 of these structures.
And many of those are actually single asset. So they're
there you go.
SPVs actually rather than funds.
They are single assets, single LP. So you take 280 out and you have left, let's say, 140. And then you look into them and then tell me how many foreign LPs the remaining 140 structures have.
Close to none, probably. I don't know.
Oh, you are very good. There is only one. It's a Korean investor who used to be friends with one of the LPs, and somehow he managed to get into GCFA, right? So, and then you ask yourself, oh, wait a moment. This should be the structure local VCs should be using, right? And then you do your homework, and then you understand all the 212 revos and etc. Oh, they use Dutch, or they use Luxembourg, or they use US structures. Why is that? So, and the reason is pretty simple. The GSYF, which is under the rule of the Turkish SEC, SPK, is being regulated in the following way. In every investment committee, the managing company, so every structure needs a managing company, PH, has to send 4 people. And foreign LPs, EBRDs, IFCs, all the big funds, the really big funds who invest Mubadalas, etc., they do not invest in structures where the majority of an IC is held by people who are not invested into the VC fund. With that regulation, you kill a potential local, small VCs growing here, easy structures, etc. Because, of course, the bigger ones, they are very sophisticated people. All, the Ali, Numan, Revo, etc. They worked in international corporations. They traveled the world, have a great education. But I believe only 10% in this country are talking another language than Turkish. Only 8% are having passports. So 92% have never left the country. They need local structures, and I'm sure they are super smart guys, but they cannot attract foreign capital. And in that moment, the local domestic VC scene is very limited. So my long answer was this. My short answer is it's the VC landscape in Turkey, the number of business angels. There are registered 800 business angels. I'm one of them. There were some years I did with two others. I did 30% of all angel investments that year. Should not be like this.
Back on the structure of the GCFA, for a fund to create their own, what they call here, the PSA portfolio management company, is that a way out of this? That if actually their fund is operated by a financial entity, this portfolio management company, and the portfolio management company has people on the investment committee, at least on paper. But if you create your own portfolio management company as a VC firm, would that solve the problem?
I'm not sure. So usually the guys, and I know some of them, right? They create the portfolio management companies because
There's some of them that are doing that now.
Exactly. But the main motivation is not to pay to the portfolio management company a part of the management fee.
Not right? The best motivation.
Yeah, exactly. This is a very Turkish way. So there is a problem, we find a solution because we are Turks. I appreciate this. But this is not the solution because also in that case, they have to appoint 4 people into the IC of the GCFE.
Right.
And of course, now we can be very, very tricky, and then we can say we find people who will be hired by the PSE, but they will be also investors into the fund, and then we send them in. And then so we can tell to foreign investors, look, guys, everybody in the IC is invested, but this is not scalable, right? And this is somehow still a very Turkish way to solve the problems around it. I don't like it. So if we want to have a bigger...
I didn't know about this. So there's typically a criteria for the members of an IC of a VC fund to be made up of LPs? Did I understand correctly? Sort of internationally, what DFIs expect?
No. What DFIs expect is not necessarily LPs. They want to see 2 types of people. Either they want to see independent IC members,
okay,
or they want to see investors. So either you have a skin in the game, or you are arm's length and you do. But they don't want to see people who are
employees, but not
employees
decision makers
of the management company of the fund. Mm-hmm. Because the same 4 people, they go to all the funds they manage.
So they need to be managing partners whose carry depends on it and who have a GP commit in the fund.
So either they have an LP commitment, or they are part of the GP, then they are carry, right, or they are independent board members.
Okay. All right, got it. Right?
So if you are an impact fund,
so so if you created a PSA, you could kind of do it, but as you say, it's not scalable.
And we know that Turkey is creative, right? So you will find always this workarounds. But then look take the seat of a big DFI, somebody who's managing 250 billion.
In Delaware, that's easy.
And they will say, why?
Right.
Why? Right? And they will go to other countries. And this is exactly what's happening. So as long as one part is only solvable by the government in Ankara, right? They have to change the rules. And then secondly, the domestic exits will remain as a big challenge.
Is that a bit of a chicken and the egg? So, because one route for exits is larger funds at a future series, Series A, Series B type, if there were such Turkish funds, then providing an exit for the seed investor at a further round. So if you're saying there's there's not enough funds because there's not enough exits.
Mhm.
Maybe if there were more funds, it would be they would also help provide exits.
Well, that's a good way to look at it, but I believe we need to. Turkey is still not at a critical mass. We had some phases. So 2011, 12, the e-commerce. Then we had the gaming time, and I think we will also witness a fintech time in the next 2 years. And maybe if Turkey is able to develop a Turkish LLM, we will be also witnessing a Turkish AI time in the future. But we are not one of those countries who ride all the waves.
Interesting sidebar there. Why do you see the need for a Turkish LLM to address the Turkish language, or do you mean Turkish LLM in terms of one that's just a homegrown, so that a Turkish company owns the fundamental technology?
Well, no, mainly the first reason, because of the Turkish language. Now it's easy to give examples in Turkish in an English podcast, but if you would say "abi sıkıştım," then most likely all the chat GPTs in the world would understand something different than what you try to say. And the one reason is that there is no Turkish LLM. You have the US LLM, and then there is a Turkish language version starting with translation and then learning after that. But it's not like it learned by consuming all the Turkish stuff. And in the moment you have this will create an environment. Just look at what chat did. So there was chat, and then now there are 120 companies who provide you services for AI agents. Then there are 80 others who try to improve that. There are 35 others taking a piece of chat and then putting it into whatever video making sequences, etc. And I try to not overestimate the AI thing. Everything in my life is AI. So everybody says, look, my glass is AI and this is AI, etc. But I understand AI is like, the web back in the 90s. And we are just in the very, very beginning. And there is not a single technology I have used so intensively in the last 10 years. And I tried to ride all the waves, right? But AI is really different. And also the question, did your Google consumption changed in the last 12 months? In my case, yes, significantly.
Sure. Just getting back a bit to the question of your motivation, kind of what makes you tick. You mentioned impact being important, but you also have a mission around entrepreneurship. You're also a founder of the Turkish Entrepreneurship Foundation, Girişim Vakfı. What brought you to that, or what's your thinking behind that?
Well, it connects with my story. I became an entrepreneur when I was 40 years old, so in 2007. And I asked myself, oh shit, I would have loved to become an entrepreneur in my early 20s, right? But I didn't know. Nobody told me that entrepreneurship. My father said, oh, you need to become a diplomat. My mother said, you should become art historian. You are so interested in arts. And I said, okay, I do something crazy. I go into the corporate world, right? But nobody told me that there is entrepreneurship. So after Markafoni, you take your decisions. You can retire. You can buy whatever, houses, yachts, cars. I'm not interested in that. I'm still, until today, I'm not owing almost nothing, right? I bought a flat in Istanbul because of the housing situation here, but I was really forced because I was fired of my previous flat. So I needed to avoid this happening again, etc. But other than this, so I decided to give back to the entrepreneurial community and found the Entrepreneurship Foundation 10 years ago. And the main objective of that foundation is to foster and develop entrepreneurial culture in Turkey. Nowhere else. It's only in Turkey. And today we are getting 150,000 applications. We have more than 5,000 people with grants in several programs. We work with companies, we develop projects, and we are really working with global companies. So we are working with Google, Boeing, Allianz. And in Turkey, it's only a few. It's like İş Bankası and two others. It's a global mindset. And I'm trying to open up for young people the opportunity to see through a different window. And then they can decide if they want to go that way or not.
And things really have changed night and day in Turkey. Maybe there's a lot more road to go, but When my brother started TurkNet, he had the same issue of, it was back in 96, that people looked at him like he was from Mars. Starting a company, why wouldn't you want to work for a bank or work for the government? And now it's much more mainstream. You see top university graduates who are interested in joining a startup or starting their own company.
I give you one story and one data point. So 10 years ago, if you asked students about their future, job, etc., 5% said, I want to become an entrepreneur. Today, it's 27%. So there is an awareness. Second, it's more a funny story. When I was with eBay, I came to Turkey and I acquired Gitti Gidiyor for eBay. And at that time, the founders of Gitti Gidiyor didn't call themselves entrepreneurs. They called them managing partners in 2006. So this is the change.
It's a good symbol, proxy for what I know how they present themselves. Maybe rapid fire type questions. Is there a most memorable first meeting with founders that comes to mind?
Well, yes, many. One memorable investment was Dollar Shave Club in the US. I met the founder at a Goldman Sachs event in the US, invested in a funny way, and then I heard nothing from him, and then there was a mail, and then he sold the company for $1 billion. So this was a nice one.
Then, was there some spark that you saw there, or just the...
He was invited to the Goldman Sachs conference. They only invite founders around the world from whom they expect to do an IPO. So I was there with Markafoni, and then there were many, many other things, the Snapchat guys and many others. So this was one I remember very well. I remember a German guy, I was introduced to him. I was in Berlin. He said, I'm also in Berlin. Let's meet. We met in Starbucks in Berlin. Then I committed 150,000 after having a coffee with him. And 2 years later, I sold my shares for a multiple of what I have paid. This was a very good deal. So I like having coffee in Starbucks, I believe. Then there is one funny story. This is really funny. I should tell this. I was on my plane flying from Istanbul to Los Angeles. I was connected to the internet. A friend in Turkey is introducing me a Turkish guy in the US named Shahin. So we write some emails. So thank you very much for the introduction. That's great, etc. And he tells me, and I tell to the guy, look, I'm in the plane. I'm coming to the US. He says, where do we fly to? I said, Los Angeles. He says, oh, I'm in Los Angeles too. Can we meet? I said, I have a stopover in Los Angeles. I'm continuing to Vegas. So it's only 2 hours. No problem. I will come. So I land in Los Angeles. This guy is coming. So I went out, honestly, met the guy, and then I had to check in again. So the guy bought a ticket, walked with me through until the gate.
Wow.
And then I invested into his company before onboarding the plane. And then years later, the guy said, you know what, Abi? I don't live in Los Angeles. I'm living in San Francisco. So when you told me you are in the plane, I was looking at flight radar. Oh, okay, he has 10 hours to go, so I can make it. I came down to Los Angeles, met you, bought a ticket to walk in with you through the gate, and then returned the ticket, and then got back to San Francisco. This was a great story.
Wow, especially since it worked out.
This was Shahin Boydar. She is also a very good investor, and I think now he lives in Austin. He's still in the US. But he's pretty famous. But this was a funny story because I really appreciated the braveness coming from San Francisco, telling nothing, and tend to get the investment. Yeah, that's great.
What's your most recent investment that's been publicly disclosed?
My most recent investment is, I think it was disclosed, but it's in a neobank. I like this Revolut, Nubank, etc. There is one in Turkey, Mars Neo, and I invested into them.
It's called Mars?
Mars Neo.
Mars Neo.
So
there's a couple in Turkey now coming out, I think.
I think there is only one neobank. I think the others are digital arms of banks.
Okay.
But they are, this is a technical distinction. So at the end, they compete for, the same crowd.
And they've gotten a banking license?
No, you do it with EPARA license. You don't.
Okay.
I would avoid a banking license for a long time because you don't want to give all the interest, etc. It's more a payment platform. You get an account, you get a debit card. You can do lots of fancy things with your debit card. And there you go. And I think they are on the market since 8 months. They did 700,000 customers.
Wow.
Not too bad.
That's a pretty fast adoption rate. There's a lot of activity in fintech in Turkey. Kind of surprised me because there's huge regulatory risk, so to speak. And I'm always wary in Turkey about dealing with regulation, but the regulation has been fairly amenable, I guess, at least to. I mean, there's a
Well,
lot of
it
activity.
depends. I think the regulation in Ankara tries to understand what's going on and really tries to help them by adapting the regulations. I see that. And also the fintech guys are organized pretty well. There is, the Association of Fintech Companies, etc., so they can talk in one voice to Ankara. This is great. But I think last week the authorities came after 3 companies, right? So Masak. And I understand from time to time they will also, there are 2 phases of the regulatory. So the one trying to understand and friendly and helpful, and then the other one, if they
Enforcing.
see, some people who are a little bit outside the framework, they are now running after them. But I believe this is the same in England or in Spain or wherever. But generally, yes, I think we will be experiencing big exits or IPOs in the Turkish fintech scene in the next 2 years.
And yeah, it's interesting that you have these kind of, I've noticed that as well, these kind of industry clusters, so to speak. There was gaming, fintech, insider may also, in general, kind of marketing technologies cluster. When you talk about gaming, part of it is this kind of spillover effect that people who are working at a gaming company that has a big exit, and they go out and start new companies. And so similarly, insider may also have that kind of a spillover effect.
Well, I think it depends. This spillover effects, or that we have this time of a kind of a company. Insider is not there yet. They have high valuations, but they don't have an exit.
Right.
Once they have an exit, everybody will try to do the same thing, right? And gaming started because Zynga Games had a big exit, and Peak Games acquired by Zynga.
Right.
And then with Peak Games, I think it was 1.6 billion. Everybody got crazy and said, what those guys can do, we can do. He is also Turkish. We are Turkish.
Right.
How great is this, right? I like this motivation by lots of cash.
Yeah, aspirational, right?
Yeah,
It creates
exactly.
aspiration.
Exactly.
What are kind of some of the most common or biggest challenges you see that Turkish startups face, or traps they fall into?
Well, let me start with some numbers. I believe Turkey is close to 6,000 to 7,000 startups, right? Which is incredible because 10 years ago we were counting 1,000, 1,500. So I see there is lots of desire to become an entrepreneur, to start a company, a tech company, high impact company, etc. So that's the good news. The second good news for Turkey is that you find still pretty easy early stage or seed investment money in Turkey. The problem is, once you start to grow, there is almost no growth capital. So the debt valley in Turkey is a real thing. Maybe in the US, I'm not sure. In the UK, I'm not sure. There's so much capital around. But in Turkey, you live it, right? So if you start to search something 5 million for your Series A, which is nothing, right? It's really difficult. Either you go to PEs and 5 million will be too small for them. Or you try to go to, to our friends who are established, and there are maybe 3 of them who could afford to put a 5 million ticket, but there is not 10. So you face a oligopoly in the market, very challenging. And then if you are not able to raise money from foreign investors, this is a next level of problems, because some of the people doesn't want to put money into Turkey for various reasons. I don't think the last 2 weeks helped us in that state. Many people say, look, Turkey is 1.1% of the world's population, of the world economy. So I go for countries who make up to 13%, like China or India. It's a much bigger game. So Turkey is not, if you are not in defense tech, I think only the argument of being in Turkey is not enough, right? So long story short, many people are interested in becoming entrepreneurs. I see lots of new companies. Like Founder One screened 2,300 impact companies in the last 2 years. So there are many people. But if they are successful, they have a hard time to find the money for further growth.
Comes back to, you were saying earlier, there needs to be more funds. Maybe over time, we do have now some funds, as they show successful return.
No, that's the key. That's the key. So if Turkish funds are able to deliver multiples which are significantly, this is 20% higher than the average multiple returns in the US, then people should have a motivation to look into the Turkish market, right? But we have to prove that here is a high risk country compared to, Switzerland, and therefore they get on average a significant bigger return. And if we can, articulate that properly, then we will attract investors. But we are not there yet.
What do you know now about startup investing that you wish you had known when you started out?
I wish I had learned at the very beginning that looking into Excels is a very stupid exercise for a company which is not existing. It's all about the founder and the timing of the idea, right? So the founder's capability of execution, and you have to find some ways to understand, right? Maybe past the performances or the way or the education or whatever. But you have to find a proxy to understand if you trust into that girl or that guy to be able to execute that fantastic idea, because all ideas are fantastic. I looked too much into Excel sheets and business plans and presentations, and I spent too less time with the founders. I think this is my major learning over time. So in my first 20 investments, I was really super analytical. And then I understood, after meeting some founders by chance, like the stories I said, and they were good exits. So it's all about the founder. It's not about the presentation.
Is there a book that you'd like to mention?
I still like 0 to 1 from Peter Thiel. I'm not sure if I like Peter Thiel anymore, but I like his book. This is a great insight. Then there is Blitzscaling from Reid Hoffman. This is something all non-US people should read, how this will not work outside the US. There is no blitzscaling without the access to big capital. Blitzscaling works as long as you have somebody who's writing the check all the time. In the moment somebody stops to write, and this can happen like in a country like, Turkey and so many others, blitzscaling kills you in the moment, because then you have a cost structure you can't afford and you are going into bankruptcy in 2 weeks, right? So, but the book of Reid is great. You should read it to understand how you should not do it outside, especially Silicon Valley. So this is, this is for that world. The next book I will be reading is from a guy called Sahil Bloom, who published a book about the 5 ways of wealth. He's an entrepreneur and now investor, etc. And I think this book is interesting.
Check that out. Is there a shout out you'd like to make to somebody else?
There is one guy I really admire. His name is Klaus Hommels, who did Lakestar. And Klaus Hommels was my first and only investor in Markafoni. And I think one of the parts of, he started Lakestar was of the exit after Markafoni. And then he set new levels on, I think the first fund was 180 million, then he raised 500. Now he is over 1 billion under management. He is running the NATO VC fund of 1 billion in defense tech. I think this guy is setting lots of, rules for Europe, and I believe we all can learn from his views. So this is somebody I really appreciate. He's not writing, he's not podcasting, he's not tweeting. So there is almost no way to follow him other than some conferences here and there. But if you have the chance to look at him, to follow him, do it. He's really visionary, I would say. In Turkey, I see many new faces coming into the VC space. So not in the GSAFA space, but in the VC space. I think they are all really good. So young people with some corporate background now turning into VC, setting a new standard. I like it. So I think we will be facing VC 2.0 Turkey in the next few years.
Second wave.
Yeah, I believe so. Yeah, I believe so.
Super. That was a really interesting conversation. We appreciated it. And that's exciting to hear about the kind of the next wave of VC managers are coming in Turkey, pointing out the obvious that there needs to be more capital, more funds in Turkey.
More
it's
exits.
Great that you have a vision behind it too, that it's also about making a difference. I think that's something that's exciting about VC. As you say, some investments are more impact, some investments are less. But I think as an asset class in general, you're investing in entrepreneurs that are trying to make a difference.
That's for sure.
Solve a problem. So it's an exciting space to be in any case. Thank you very much.
Thanks for having me here.
Thank you for listening to this episode of the Turkish VC Podcast. My name is Yunus Çelebilir. If you enjoyed this episode, please like and subscribe and tell your friends. You can listen to more episodes wherever you find podcasts on Spotify or YouTube, etc. Stay tuned for further episodes.